and welcome to the Residential Home Authority. We are your hosts. My name is Vanessa St. Clair, and this is my dad.
And I am Don.
And we will be talking about something pretty important today, something that I definitely need to learn more about, and that is loans. And that's taking loans out on your house, not the loan you get when you get the house, because statistically, you're not going to be paying cash, but we're talking you can take a loan out on your house. Am I correct, Dad?
Well, the thing of it is you can take a loan out on the equity of your house. So in other words, once you've moved in, typically the home will increase in value. And at some point in time, you could go back and withdraw the money from where your house is today, is from a value standpoint.
Oh,
and
that's
what we've
great.
learned is, well, it can be and it can't be, because 40% of the people that have tapped into their home equity went in said that they regret doing it.
Oh.
And they feel bad because they didn't fully understand the long-term impact of what it does.
Oh, okay. So let's start there. But I feel like I need a little vocab lesson because I'm not quite sure. You know those words you hear and you go, oh, I know what that means because you've seen it a million times, but to really think about it. So equity is how much you have gained in the value of the house since living there. Is that correct? You bought the house for $100,000 20 years ago and now it's worth $200,000. That $100,000 gain would be the equity that you have in it?
Yes. If you're going to borrow, then you can either go the route of a HELOC or you can go the route of borrowing against the equity known as a home loan.
Okay, so what is a HELOC?
A HELOC is a revolving line of credit. So you're going to have an appraisal, the bank will evaluate what the value is now, and you'll be able to set up a HELOC, which is basically a credit line.
Oh, that's great.
And then the home equity loan is once again on the same order, except it's a hard loan. It's like, here's your money.
Okay, that feels like it could be a slippery slope. Like you could just kind of forget.
You shouldn't use your home as a piggy bank. That's the bottom line.
Oh, hard take. So I know your opinion on this.
Exactly.
Okay, so you're saying you don't recommend using either of these options. You're like, please think about it a good bit before you do it?
Yes.
Okay.
The reason for that is this, and I think the reason the 40% of the people regret it, because likely the 40% of the people that regret it were the people that didn't use it for great purposes.
Okay, what would you deem as a great purpose?
I know I need to replace I really don't have the cash right now. The best way to get it would be to take out a home equity loan or a HELOC to do some necessary maintenance that I can't afford immediately.
Okay.
That would be a reason. But what some people do is they'll ring up their credit cards or go buy a car and they'll go borrow against the equity of their home in order to make that payment.
Oh no.
And then they go out and start charging again.
No, that sounds like something that happened in the Gilded Age. That's like a woman in a bonnet going, well, Papa left us the house. And a man in a pinstripe suit is like, no, my dear, there's no house left. You don't have a house. It's gone. The bank owns it. And she's like, oh, no, I have to go live with relatives in New York City. It's just the first scene of Gilded Age. Okay, cool. Good to know.
I know in the case of our listeners, there may be people that have not owned the house yet, so we'll start there. New construction drives the market. So as the cost to build a home goes up, the existing houses go up as well. Maybe not as high because they are lived in and a used product, but they do grow in equity 9 times out of 10.
Okay.
Your equity will also depend on where you purchased and what economic changes and societal changes have happened. And for instance, is your floor plan exactly what people are looking for today? They'll pay top dollar for that, so on and so forth. A lot of driving reasons for equity. But the bottom line is, as your home has gone up in equity, so have all the others. So let's say you face a situation where now you want to sell, you want to upsize because of family growth or you have to sell because of a family situation. I mean, there are, once again, many reasons to sell.
Mm-hmm.
Well, now you're going to go out and purchase a new home. You really need that equity to help you buy a new home because, like I said, they've all gone up as well.
Mm-hmm.
And if you eliminate that money, could be more of a struggle, or you might find yourself not being able to move into what you're used to.
Oh, okay. Okay, so
and And the other thing is, a lot of times we can't choose when we want to sell. There may be extraneous reasons, a death, who knows. And if we've been borrowing against that house, it's a possibility, depending on the time of market and the competition that's out there, that that loan may have been higher based on a higher number than what you were able to sell your house for.
oh, so now I can see where this can bite you in the buttokus. Okay, so there is the possibility. Let's say you take out a loan. There is the possibility that you could recoup that somewhat if you continue to stay in the house for a while. But of course, life happens and you might not. You might have to sell your house next year and not be able to stay there for another 10 years.
The other thing to think of it is this: when you have an appraisal done on your house, the appraiser is in tune with the different reasons that you're borrowing. Mm-hmm. So the approach of the appraisal changes. So if the bank, and once again, this is kind of an insider note, kind of my viewpoint, although I was involved with the industry somewhat, where I was working with an appraiser. The bank kind of dictates their intent. So if the intent is a home equity loan and they want to lend the money because you have the propensity to pay well, and maybe they like the interest rate, your number could be higher than what you may be able to sell the home for.
What? And why would they do that?
Well, an
Are they
appraised
helping
value
you?
is good for the day that it's appraised, and it's good for the purposes, it's been written for the purposes that it was intended for.
Yeah, but like, what would that help them at all? That feels like it would be crippling. That feels like
Oh, could be. That's what I'm saying. It very well could be.
But like, why? No. What I'm saying is I don't even understand how that would be helpful to the bank to write something, or do they make money off of writing someone a higher loan?
Well, they want to lend you the money, and if you want a certain amount and you qualify for it, they're going to lend it to you. Then it's up to you to pay it back. They're typically not going to get in a situation, because keep in mind, when you bought that home, you may have put 5% down, 10% down, 20% down. So they know if you default on your loans, whether it be a HELOC or a home equity loan plus your loan for the house, they realize they're going to end up with a house and at a loss. So they're not going to let you get too far into the hole. But at the same time, it's really, a lot of it is based on your need and also a lot of other factors. But we bring this up today because there are people who have used their home as a piggy bank. I've had clients where we had to work through that. That's a concern. So what it really does is it creates somebody who overborrows.
Oh, well, Americans have several trillion in credit card debt, according to some online publication that I read at the end of the year. Yeah, we have like more credit card debt than any other place. And they don't have to be bad, but I think sometimes it gets out of hand.
I just think that if you can avoid going in that direction, it's the best thing for your future. And if you're really having problems, maybe consult with a financial advisor to kind of help you adjust.
Okay, wow, you don't have to at me like that. You don't have to...
I'm not trying to attack. But
I'm just kidding.
But and in a future broadcast, we're going to talk about the equity, because there are ways, if you're willing to move fairly often, there are ways that you can build equity in a short period of time. But the bottom line is, it's last piece of advice.
Don't say last. We're only 12 minutes into this bad boy. Stop saying last. Let's not rush the process here. We got people who want to learn. I certainly want to learn. We gotta talk to them, give the anecdotes. But what's your piece of advice? I'm sorry, Dad. Didn't mean to cut you off there.
When you purchase a home, don't go by the qualifications that the bank gave you to borrow the money. That's number one, because you are going to have items in the house that are going to break down in the short run. Even if you have a home inspection, doesn't mean anything. Just to give you an example, in the opportune time. New Year's Day, my hot water tank goes.
I know.
Okay, had a warranty on it, not from a home warranty company, but from my water supplier. They covered $1,000 of the unit. The cost to put a new hot water heater in with a vent in the Pittsburgh area right now is $2,700.
Yowza.
So imagine having gone through Christmas, people spend their money, they get down to the bottom line of wiping out their cash reserves possibly, and now you have something like that happen. You don't have an insurance policy, and you've got to come up with $2,700, because I can tell you from experience, going one day without hot water is enough to make you find the money.
Yeah.
It's a little cold.
You said I would be selling myself on the street for some hot water. Just kidding. You did not say that. That was just me. We don't have to put that on the internet. That just...
Well, no one would give me any money for that, so I've got to go to other means.
Let's never say never. Never say never. You
Okay.
You don't know. But yeah, no, it really makes it, you really want to get that together really quickly.
Well, let me say this, and we counsel our buyers, but the bottom line is this: if you're going to move into a house, you have a home inspection. The home inspector is not going to be able to tell you the age of the roof. He's not allowed, but they can give you an idea of the condition of the roof at the time. So now, let's say I bought my house. Mm-hmm. And my inspector is indicating to me that I probably have about 10 to 15 years left. So now I need to, the wise thing to do is to check into what a new roof would cost when I have to replace it.
Okay.
And now I can budget that out over the course of time.
Okay.
So let me give you, since you wanted this episode to be a little bit longer, I'll give you a few facts. Okay. A hot water tank will typically last 8 to 12 years. Now, there's a conventional hot water tank which has, and it's real easy to tell, it would have a metal flue above it, kind of a cap, and then a pipe coming up. Mm-hmm. A vented hot water tank has a fan on it. It's usually colored black, and it's like sitting a mechanism on top of the hot water tank. Okay. And then you're going to see a piece of plastic pipe coming out of it, usually white. Okay. That's a vented hot water tank. Or you could have an instantaneous hot water heater, which is not a tank. It looks like it looks like you hung an electrical box on the wall, except you've got gas and water coming out of it. Yeah. That'll last 20 years. So your conventional is 8 to 12. Your hot water or your instantaneous is about 20 years. You can budget for that. Mm-hmm. Your roof, if it's a 30-year shingle, you can figure 25 years or less. If it's a 20-year shingle, obviously you drop down from the actual stated, because the stated time is based on very special factory conditions. Okay. It's not the same as being out in the elements. And everybody, depending on where your house is, obviously your elements are going to be different. Yeah. So what you're saying is whenever people move in, even if you're not anticipating this thing will go, you should still consider setting aside some money every month just in case for when the time comes that this will need to be redone. Exactly. That's what you're saying. So that way you don't have to borrow against, so that way you don't have to do the HELOC, you don't have to do the home equity loan. Or maybe any other type of loan. Or maybe you do a partial one. Like it's smaller, so that way you don't have to take out as much. So someone could pull out money out of their house. That's fine. That makes sense to me on some level. Or actually, for a lot of reasons, it does make sense why someone would have to do that. But when people sell their house, they typically leave with like a check, right? Like best case scenario, you leave with a check. That's the goal. Okay. That's the goal. But if you take out too much money, you could just be left with nothing, or do you have to like pay? You could bring a check to closing. I've had that happen. Oh, that sucks. I had a husband and wife who, I guess, loved to use credit cards, bought a lot of things, and unfortunately something changed in their lives. They had to sell. And looking at where the market was at the time, and that's really that's part of the reason that I wanted us to do this episode, is because People especially that bought right after the pandemic, when we were in that crazy time period when there were 17, 20 offers on a house,
Mm-hmm.
especially at the um, lower price ranges.
Mm-hmm.
People overpaid for that house. Yes, they got it, and yes, the interest rate was low. But being that the interest rate was low and that they bought it higher than it was possibly worth, they're already behind the eight ball some in that case.
Oh,
So now you're going to borrow against the equity of it after the next 3 years. It's a concern. I
okay.
just hate. I've been with customers that have been in that situation, and it is a terrible situation.
Yeah, because they're like, I could really use a check at the end of this. Because, like,
And
it.
price range has nothing to do with it. I'm thinking right now, the last client that we worked with, it was a fairly expensive home, and they're going, we, basically what it came down to is they're going to have to change their lifestyle and go into something that is not from where it's a down. I don't call any house a downgrade because I think the fact that you're fortunate enough to afford to put a roof over your head is awesome. But some people look at it differently than that.
I think, if you talk to Kevin Costner's ex wife, she's like, I am accustomed to being on the beach side of the PCH. I am accustomed to not having to cross a street to get to the sand. Yeah, just making a little bit more trivial. But yeah, no, there are I agree with you that any housing is wonderful as long as it's safe and as long as it's safe for you. Yeah, some people don't view it that way. Some people view a house as I live a certain way and I am not willing to change that. And especially with what you can build versus what you could get before. I mean, builders today are not building what they used to.
There was a builder that I consulted with, a very good builder, excellent builder in Pittsburgh, and he used to say to me, he said, Don, if people wouldn't buy those two BMWs and they would buy a less expensive vehicle for themselves for the next few years, they could afford a better house and it would pay off in the end for them.
Well,
That was his viewpoint.
I guess we
That
will
was
not
his
be
view.
getting the BMW sponsorship anytime soon. Thank you for that, Dad, for cutting off that for us. But we love BMW. You're great. You're just maybe
Well,
holding people back from equity in their house, BMW? Maybe that's you. No, I'm just kidding.
well, they send me one. I'm already situated in my house. I'd be happy.
Yeah. If you're already in it, you're fine. You're fine.
Yeah.
But maybe get the cars after you get the house. Don't be a silly goose. Don't get the crazy car when you're living in the apartment. Don't do it. Unless you plan on staying, but okay, continue.
Well, at least my experience, Vanessa, we'll have people talk to the bank.
Mm-hmm.
They're going to get qualified for a loan. They're told what that amount is. Now, obviously, they're going to look at a lesser value because of home, because they'd like to be in control of their house payments.
Mm-hmm.
But once they go out and they see the market and they see the limited inventory and they see the cost, they typically end up spending close to what the bank told them they could lend them.
Yeah.
And the negative side of that isn't the fact that, hey, you wouldn't be getting that house if they didn't believe you could pay for it, but it's the lack of real knowledge of what you're buying. I mean, the bottom line theme, as I think about the podcast we've done so far, is a lot more homework needs to go into purchasing a house, from realtor to bank to final product, and also the preparation of understanding what's going to break down in that house. What are the weaknesses of that house? What am I going to have to prepare for? And do I have the money to cover it?
Okay. Yeah. Yeah, I think a lot of people assume, when I was working with you and we were meeting people, it seemed like a lot of people just thought that they bought the house and that was sort of the end of it. And they went through this process that was strenuous and difficult to purchase the house. And it is, but that kind of is just where it begins. It's almost like you made it to base camp. Now, good luck with the rest. I think people think that that's the pinnacle, is the purchasing of it, and ultimately it's really not.
No.
And the only way you're really going to appreciate is if you stay in it a long time, or you make improvements to it, or you continue to work on it. You can't have the same house that you did 3 years ago and expect it's gone up a crazy amount. It's not like during the pandemic where people who bought in 2016 were able to sell in 2020 for a crazy amount more. I hope we don't get to that market again, because that really screwed over a lot of
people. Are thinking that. It doesn't necessarily mean the market's going to respond to that. As I was studying homes on the market, I'm seeing people ask $80,000 more for a house that they've lived in for a year and a half and haven't made a single improvement. Pro tip, keep in mind when you're looking at houses, it doesn't necessarily mean that the agent had an input into where that house is priced.
Oh, yeah.
Well, think about it. The seller owns the house. The seller makes the decisions. The agent can come in and say, this is where I believe it should be based on statistics, based on the number of people that we're seeing in the market. And believe me, as an agent, we're loaded with stats. If you know how to research it, you can get a ton of information to help your seller. But the bottom line is they call the shots.
So you're saying let's not judge if there's an overpriced house and we see agent A who's representing it. You're not going to necessarily need to judge that person and say, wow, they really overpriced that house. Because it might be the seller. It might be the client there who is being a little bit hard-headed and not reasonable.
Well, we recently had that situation. The seller priced the house. And here's a pro tip advice. You're the buyer. Ask the question, who priced the house? And what happened in this case was people were interested in the home. And they sent back a list of questions, and one of the questions they asked was, who priced the home?
Oh. And you're allowed to answer that, right? Like, that's not against the rules or something to...
The bottom line is as a realtor, when I get questions from buyers, I don't interpret those questions for anybody. I pass them on to the seller.
Okay.
Because ultimately, that's the person that understands the house, lives in the house, and who's trying to sell it.
Okay.
So in that case, it's basically a black and white answer. Yeah, I, the seller, dictated the price.
Chose this price. Okay,
Yeah.
okay. So basically, this episode is just a little PSA to everyone out there who's thinking about maybe taking some money out on the house, and there are some reasonable explanations for this, but a good bit of the time, you're gonna not feel great about it long term. So maybe just put a little bit more thought into it.
Once again, my advice to people is not only put the thought into it, but find a really good agent. Take the time to interview them. Find out what they really know. Find out what they're about. And in our next episode, we're going to talk about going out and looking at purchasing from a tract builder. And it's the bottom line. It's who you're... First, if you choose to work with an agent, and then who you're working with. But a good agent should be able to guide you through all of this before you even move forward to make a purchase.
Yeah, they should be explaining what's behind doors A, B, and C before you end up with a mystery box going, oh, shit, this is a much tougher situation than what I was anticipating.
Well, yes, and another tip to them is find out what they know about home inspections.
Dad, we have talked about this. We cannot keep telling people. I mean, we can, but like...
A home inspector, this is the reason I brought that up. A home inspector, it's the requirements of the home inspector so that people understand. So a home inspection, one thing I forgot to mention, the air conditioner is typically the manufacturer says 12 years. I've seen them last 40. The bottom line is, as they get older and probably into that, if I had to predict it, into that 22-year stage, 23-year stage, the efficiency starts breaking down some. So you're paying more to get your property cooled.
Okay.
But the bottom line is, those machines are pretty steadfast at running. And it doesn't matter the weather. And typically, if it breaks down, it's going to break down within the warranty period. So make sure that anyone that's going to do repairs, you know the warranty period of that unit. But what I'm saying is, home inspector is going to run the hot water. If the hot water works, they may tell you the age of the hot water tank, but there's nothing you can do about it. I mean, you're buying the house. They may tell you the age of the furnace, But what are you really going to do about it? Go back and renegotiate? Well, people didn't have a new furnace when they priced the house. They're going to tell you the air conditioner works, but does it really cool the house great? We don't know. So what I'm saying is you have to prepare for those expenses and know what to anticipate as best you can. The other thing, Vanessa, that people may not realize is when you're qualified for a loan, or even when you're looking at houses, nobody's talking about or most people aren't talking about how expensive it is to heat or cool that house. Utility bills are not published per se, at least not in our multi-list.
Oh, okay.
And I've heard of people that back when I was doing the energy auditing and helping people try to figure out why their house is so drafty, I was talking to people that were paying utility bills that were higher than their mortgage.
Oh, that's crazy town.
So, it's crazy.
Wow. Okay. And we're not talking like old drafty house that we know was built with sticks and mud. We're talking these are somewhat newer in the last, like 30 years or something, and you kind of expect a little bit more insulation there, right?
It's surprising. Keep in mind, most people don't really think about this a lot. Secondly, yes, I can see that granite countertop. It's extremely pretty, but I don't see that massive amount of insulation you threw up in your attic.
Yeah.
No, I'm rather excited around here because our multi-list has never identified energy efficient homes per se, and that change is coming.
Oh.
So, as you and I know, there are thousands of homes that I tested here for Energy Star going back probably about 10 years ago. There's no mention of it in the multi-list. I don't see I don't even know whether they're aware of it. But the bottom line is those homes are more valuable, and I happen to know which ones they are.
Yeah,
because
you do.
We did most of the certifications.
You did. It would be really cool walking through a house and see that your signature was on the electrical box, or
I've already had that happen.
That's pretty cool. Well,
yes, I've shown homes. Two cool things that have happened that I don't think I've ever really said to you. I've gone into homes that we tested for energy. I've also gone back into homes that we inspected.
Oh, wow.
To show buyers. And a couple of them, they didn't do anything.
Oh,
that
no.
was in the report.
Oh, no. And you're like, guys, you hired me for a reason. What, you silly goose? I told you this was a problem. Why would you have not done something about it? That's great, Dad. That's really cool. And I'm sure that's really cool. You have a stamp on tens of thousands of houses across Western PA, and it's really cool to check out sometime. Not that I'm going to people's houses in the Pittsburgh metropolitan area often anymore, but yeah, you never know. Maybe check your electrical box, see if Don Meinhardt signed it.
Yep.
Okay, now you're gonna be humble. You said I don't like to brag. I'm not gonna be too crazy about it. Okay, well, I feel like I have sufficiently learned about what not to do, and I am heeding your advice. I don't have a house. I don't have a mortgage, but I'm taking it in. We're gonna remember it for 30 years from now when I can. No, I'm just kidding.
Well, our main purpose for this podcast, and also the reason that I came back in to represent buyers in the purchase of homes or sell them, is you told me use that information to help people. And my niece didn't really want to take going into attics anymore and doing evaluation of houses, whether it be inspections for energy. So this is my way of helping people.
That's so sweet, Dad. But I also noticed that you're not mentioning that I went into most of those attics for you. And I feel like that is not being represented in this conversation. So I don't know why your knees are taking the hit, because mine seem to be the one that were in the crawl space and up there in the attic, walking around rat feces. I'm just saying that out of the two of us, no, I'm just kidding. You definitely did your fair share when I would call out sick, because you can.
Well, as soon as we saw a problem.
As soon as we needed an actual expert's opinion, we would send you up. I'd be like,
I don't know about expert.
You'd be like, I would say, oh, something looks fishy up here. Oh, this is out of my pay grade. Someone else should be looking at this. Or I would just hit you with 10,000 photos and you would have to go through all of them. I thought, let's canvas this bitch. Let's just boom, boom, boom. Sorry, was that? We can bleep. We'll bleep me because I know you don't like it.
Yeah, I think we need to.
Okay. Well, this has been a wonderful episode of Residential Home Authority, and we are your hosts, Vanessa.
And I'm Don.
And we can't wait to see you next time. If you have any questions about these types of loans, or any other questions about any of our other episodes, or things you want to hear about, drop a comment below. We would love to hear your thoughts and opinions, and we would love to fight with you in the comments. Okay, just kidding. We don't. Okay, love you, Dad.
I love you too, sweetheart.
Okay.
Bye-bye.